Okay, it's just want to update you. So these noises that this is just alerting me consecutive ups, consecutive downs. So it's just to keep bugging me if something keeps moving in one direction. I've got it programmed where these things just pop up and down. So you can see two consecutive bars up, and I have the alert set. Alert me once every bar, and then clear the triggered alert and redo it again and again and again. The consecutive bars are set for 25 minutes, so two consecutive bars in the same direction, or a breakout of a 2 bar breakout. I think it's a 2 bar breakout. I have it set to. I have it set to. Yeah, 2 bar breakout. So these alerts just bug me all day, just to I of course end up ignoring most of them, but so I have two trades on right now. I've got a cotton trade and a soybean trade. The cotton one, it was just textbook. It just looked like the chart looked like it came out of a trading textbook. I mean, here's the daily. You have this spike bottom and what they call a cup and handle forming, where it's got this is the cup, and then it sort of here, and then it's breakout, and so it when it broke through the high from 3 days ago, and now it's going to retest this high. So that's part of it. Normally, I may not trade this also, but the one other factor that I always look at with the grains, especially cattle, anything that's agricultural related, is I look at these seasonal charts, and if you look at cotton, it's one of these crops that they plant in the spring, grows in the summer, just like corn and soybeans. And if you look at April, look at this. The end of March, this is a seasonal chart for this is sort of like an average price for 37 years. You see it hit this low here and trade into it. So with this classic setup, let me show you this on the shorter time frame, the 500 here. So this is the daily setup. This is a longer term, last year. Got this bottom set in March and this trade up. But then if you look at this shorter term chart, you've got this rally, this sort of consolidation happening, and then this breakthrough this morning. So I didn't buy it till it's about right here. So I was a little late to the party, but just tick, 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 ticking higher. Consistent with my theme that we're coming into a commodity bull market right now. And the other one is soybeans. Really late buying this morning, and I thought we'd have more rotation happening before it was ready to go higher. I've been putting on my I've been putting on my daily trade sheet to watch this one, and it went up 2 days. It went up, peaked up, and it came back down. I thought it would wait, like sort of this sort of thing, wait maybe a couple more days before going up, but it's shooting right back up. One of the reasons is there was a bullish report that came out on it. So I just watched it. I hated to be late to the party this morning. I may sell a little bit in a minute. But this is sort of, I bought it. You can see really late. I just bought it here. So would have liked to buy it sooner, but I just wasn't expecting this big of a move and to go retest the highs. So I'm very skittish on it. I may cash out a little bit in a minute. But the other thing I want to show you real quick is sort of the margin situation. So you look at total cost here. Now I did sell 20 of the cotton, so 1/3 of the position. I had 60, now I'm down to 40. So this was the total cost here. This column, total cost 110,000. This is the amount of margin that this account is using up. So this was around 100,000. It's down to 67,000. Um, so out of a $1 million account, I'm using up 177,000 in margin. So 17%, you could say, 10% in one and 7% in the other. Now, but the actual cash value of these, what I have here, so there's 2.5 million in soybeans and 1.3 million in cotton. So to to buy $2.5 million worth of soybeans, you need 110,000 in margin. So it's like 5% margin. So while you see these markets moving up and down and these profits moving up and down, there's quite a bit of leverage involved. If you actually look at the percentage moves in soybeans today, it's up 1.3%. So these are not drastic, crazy moves. Cotton is up 1.3% also, right around the same. So just to give you some idea. So if I'm up $12,000 today, well, I've got open trade equity of 12,000. I booked $2,600 profit in the cotton by selling a little bit. So if I end up with a $15,000 profit, um, you know, that was 1.5% of the total account, but closer to about 15% of the total margin being used in one day. So just give you an idea of these sort of numbers to wrap your head around and sort of understand the type of money we're dealing with and the requirements needed to trade this stuff. So, all right, checking out.